There you go.
Hello, traders. Cousin Vinny coming to you from theclosingprint.com, December 26, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, stocks, and market trends that we're seeing going into the last week of the year and the probabilities of the start of 2023. Currently, most of our indicators are neutral with 6 bullish and 3 bearish. The rest are neutral. We do have S&P 500 support at 3,800 with 3,900 resistance and fair value still at around 2883 based on 2022 S&P earnings. It's the latter that has us most cautious going into this last week of the year into 2023. There's been much talk about the S&P 500 earnings, currently $220 into year end, and assuming that earnings will be flat next year and the market remains at the historic average of a multiple of 17 times forward earnings, the value of the S&P 500 currently around 3740, earnings would put us around 200 points lower or at around 16 times earnings at 2864, which is what this chart is trying to tell you. If we get down to fair value at around 2883, that would amount to about a 18.7% decline, roughly 19%, going into the second quarter of 2023. That said, we'd expect to see growth in value continuing to move lower, which we're seeing in the upper panel. That ratio continues to drop. Growth stocks are, as a sector, below the 21-day moving average, and that is turned lower, while value stocks have shown a bit more resilience and looks like it could see a retest of the 21-day in the short term, in addition to what we're seeing on the S&P Equal Weight Index. Now, if the markets are going to start moving lower into 2023, we'd expect to see these leaders moving lower. Big cap tech dominates the S&P 500. 32% of the weight is in these 15 stocks. So you need to keep an eye on these. We will do the same during the live session. For now, they're a bit weak, with Apple at a double bottom low. Microsoft trying to move back above the 50-day, making a higher low since the first week of November. In addition to Google putting in a higher low since that November low, we're looking for a retest of the bearish trending 921 and 50-day this week. Amazon in a bearish trend, 921, 50, and 200-day are all turned lower and trending, with Meta in a 3-week sideways pattern looking for a push higher or lower this week. Bottom line, these stocks are the leaders, and if you're looking for an uptrend, that would mean we'd need to see risk-on indicators turning higher, like the consumer discretionary versus consumer staples sectors, which are currently moving lower. The ratio dropping is telling you that consumer staples is favored over consumer discretionary, and that institutions have a defensive posture. In this case, defensive stocks like Procter & Gamble are trending, while the previously reviewed tech stocks are at lows or moving lower. Defensives are moving higher. We've got Procter & Gamble, Coca-Cola, Kimberly-Clark, and others in the consumer staples group moving higher. That's defensive, with many reasons to be cautious going into the last week of the year. Here's the NASDAQ 100 making a higher low since the October 13th low, but still below the 50-day and 200-day moving averages, while small caps were unchanged last week. We're looking for direction here as well, making higher lows, with potential for a retest of the 50-day moving average overhead, particularly in the energy sector, where small cap energy is moving back towards the 50-day. It's above the 200-day, where we saw many stocks from this sector performing on Friday, along with the large cap energy sector pushing higher. It's at the 50-day moving average. We're expecting a move back towards 52-week highs. RSI is above 50, and MACD has crossed with stochastics rising. So we'll be focused on this sector going into year end. And if you are cautious like we are this week, we're paying attention to the New York FANG index. This has all of the FANG stocks plus a few that you might not be familiar with. This is trying to make a higher low, but it is below all of the moving averages and showing relative weakness. Bottom line, we're cautious going into Tuesday trading, and we'll update you on positioning going forward into 2023 as the week unfolds. Yields have started rising again after peaking in October, coincidental with the bounce in the indices on October 13th, with the 10-year making a higher low compared to July, August, and the beginning of the year. We're retesting the 50-day moving average with RSI above 50, MACD's crossed and stochastics embedded. Another reason to be cautious going into year end as the Fed continues to raise rates, along with junk bonds, biotechs, small caps, crude oil and gasoline, Bitcoin, and advanced decline. These are telling us to be more cautious in the short term and wait for a trend to develop this week into 2023. So you may be asking yourself, well, what about the US dollar weakness? How can I position into year end and 2023? Potentially, this is a tailwind for growth stocks, so we'll have to watch how big cap tech stocks trade this week. In addition to leading economic indicators and metals like copper holding on to a bullish trend, looking for a higher high if you're bullish equities. And if inflation continues to be an issue in investors' minds, you would expect to see gold moving higher together with silver, which we do have a position in. I have no position in gold at the present time. Only silver, looking for this higher high and higher low trend to continue, so long as the markets are concerned about inflation. Crude oil remains in a downtrend. However, we did see a bounce over the last 2 weeks, along with gasoline, which is bouncing at a longer-term moving average, looking for a push higher if this trend continues, along with the CRB index. Commodities, we're looking for a follow-through and a push higher. If we get rejected and turned down, that would be bullish for equities. Bottom line here with commodities, bonds, and currencies is we have to gauge their trend this week and see what they're looking like towards the end of the week into 2023 so that we can position accordingly into the new year. As we go into the last week of 2022 with the expectation that the markets can move lower if earnings don't improve, with a looming recession and the prospect that earnings will contract, we're looking for sectors to continue underperforming, reasons to be hedged and cautious going into the new year. We also have international markets pulling back a bit, with the South American countries, Turkey, Greece, and Southeast Asia performing the best. With the backdrop of a global recession, reasons to be cautious going into this last week of 2022. Given everything that we've discussed thus far and the expectation that S&P 500 earnings will contract as a recession starts in the first half of 2023, we are focused on stocks that showed relative strength last week: energy, consumer staples, and healthcare. With that in mind, we do have these stocks below that are set up, looking for a follow-through this week for short-term trades using tight trailing stops while remaining partially hedged to protect against downside risk. Considering where markets are trading, we are watching for stocks on this IBD 50 list with stochastics that are turning and moving higher, price above the 21-day for starters, with many showing potential for follow-through, and each of these having stochastics rising, with a focus in energy towards the end of last week, expecting to see a follow-through this week. Equinor, Apache, APA, ExxonMobil, Chevron, ConocoPhillips, Occidental Petroleum, looking for all of those to potentially move higher. You can see ExxonMobil back above its 50 and 20-day moving averages with stochastics rising. Flex LNG bouncing at the 50-day, stochastics oversold, looking for a push higher. Hess pushing back above its 20 and 50-day moving averages, stochastics rising. Look for that to continue this week. And with good housing numbers, existing home sales and new home sales last week, many of the builders are moving higher, like D.R. Horton, Toll Brothers, Beazer Homes, MTH in this case, above its 21-day, trending, stochastics turning higher. Pulte Homes trending, making higher highs and higher lows, with home improvement stocks like Home Depot and Lowe's trying to make higher lows, pushing against its overhead moving averages, looking for follow through this week. Planet Fitness showing a trend, looking like it might break out of this 3 weeks tight pattern and push higher as people go back to the gyms after the holidays. Shell Oil, first time I've seen this on the IBD 50 in some time. We've got stochastics turning higher, price above the 21-day, looking for a follow through this week in oil and gas names. Also looking for some of the real estate REITs, especially the ones that are focused on oil and gas leases like TPL, Texas Pacific, holding on to the 50-day, looking for a push higher. Stocks in that group, in addition to some select retail names like Deckers, Ulta, Elf, all pushing higher last week. Stochastics turning on Ulta with price action just below its 20-day moving average and stochastics turning, volume increasing last week. Williams Companies, another oil and gas name, looking for a follow through. Volume picking up, stochastics turning, price at the 21-day. Additional stocks that we had on scans, IBD stocks showing relative strength at new highs. The top IPO stocks for the year. The top 20 big cap stocks followed by IBD. All of them on this list. Stocks like Archer Daniels Midland looking for a follow through. Stochastics continues, consumer staples. AbbVie in the healthcare sector. Stochastics turning, price trending along its 21-day moving average. Caterpillar and John Deere both looking like they might break out of the sideways range that we saw last week. With Caterpillar, stochastics a bit embedded at highs, but looking for a breakout this week in Caterpillar and John Deere. Additional energy stocks like Halliburton showing up on scans. Stochastics rising, price retesting the 39.50 level, looking for a breakout in energy this week. Along with Hess, another favorite, looking for a push back up to the highs near 150, stochastics rising. New IPOs like ACDC, ProFracking in the oil and gas fracking business, looking for a push higher, stochastics rising, price above 25, looking for a test of 27 with stochastics rising this week. Additional names besides Texas Pacific in the oil and gas REITs, we have Permian Basin Realty. This one looks really good, breaking out last week, stochastics rising. Inexpensive name, looking for a follow through this week in PBT. So with that in mind, make sure you're checking out the stocks that are listed below. These all have stochastics set up, looking for a follow through this week. Particular focus in energy, healthcare, and consumer staples. with select stocks in the consumer discretionary retail space that are moving higher that we just discussed. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. The day after Christmas. Hope you're having a good holiday. This video is a little bit shorter than usual. Just want to get back to family and enjoy my weekend. I will send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. So get out there and enjoy your family. Have a great weekend. If you're trading tomorrow, I'll see you bright and early in the morning. Take care, and we'll see you then. Ciao.